Alright, good evening everyone. Welcome to today's market debrief. We are looking at the first one, which is the S&P 500 index, and as I've mentioned in the past few videos, the US market has been very strong. Okay, so what we have seen in the past week, right, is that the US market has broken off its new high and has rallied for the past like 4 days. But last night was just a small little day, rest day. Okay, so market is indecisive whether they want to carry on rallying up or might do a pullback. So I mean, usually after such a strong move, do expect a pullback. Okay, before it carry on its rally. So for the Dow Jones, it has a same pattern, all right, as the S&P 500, whereas Nasdaq is the weaker among the three. Okay, which I also believe that they will also catch up, because on the longer term period, right, they are a much stronger index compared to the S&P 500 due to the overweight in technological companies. Alright, so with the tech boom and the tech rally all around the world, I believe Nasdaq should start to break their high quite soon. Okay, so you just have to bear in mind, and watch out. Okay, the Hang Seng market, it has a long holiday. It was the market was closed since Friday and only just opened today. All right, and after it opened, it basically had a sell down. Okay, for most of the day today. All right, but judging from the overall looks of it, it seems most likely is going to be trading in a range, between 27,500 and this 29,000. All right, so most likely it's going to trade in a range from a base, before it starts to turn up. So this might take like a few weeks or a few months, probably like 2 to 3 months. Okay. The China market has been rallying for a few days, following the US market, but as they had what I call the pullback has been quite steep as compared to the S&P 500. It's most likely going to start to form base here over a period of time. Alright, so you just have to be patient. Okay, most likely it's going to be in concurrent with the Hong Kong market. Straits Time Index, our Singapore market, last week I mentioned the Singapore market is having mixed signal. Alright, some are strong, some are weak. Okay, so what we have is some gap up, and then past 2 days of pullback. So it comes like for the week, seems to be like no gain, no loss kind of situation for the Straits Time Index. Okay, so but let's do a review of the Straits Time Index. We do know that last year March we had a very big crash. Okay, and just before the year end, I've been telling most of you guys to start buy banks, buy the big cap stocks, mainly because of a year end rally and a New Year's rally. So did this so-called year end rally and the New Year rally happen? Okay, so because this is what I've mentioned over the past 5 years, that this type of rally tends to happen 8 times out of 10 years. Okay, so most of the time we should expect very high chance that it should happen. So the Singapore market happened. Yes, it did. From beginning of November, it rallied all the way to end of the year. So we have our year-end rally. Okay, quite a nice one. And do we have a New Year's rally? I will say, yeah, we do. But it only started in February, like after the Chinese New Year. And then we had this rally all the way to today. Okay, so what should we be expecting going forward? Okay, so which comes to the thing in the most commonly heard phrase, sell in May and go away. Okay, so we are now in beginning of April. Okay, May is just next month. And the reason why this prophecy seems to come true most of the time, I would say 60-70% of the time, like 6 times or 7 times out of 10 years. Alright, that these things tends to happen. And the main reason why is that most of the companies give their final year results, end of year results, or report their year-end results, right, in April, May. Okay, some hit target, some don't hit target. So if a lot of companies don't hit target, people just sell their shares. Okay, that's one reason. The second reason is most likely that in order to wait for the next set of results, they're going to wait for a year. So they most likely not going to hold the company for one whole year. And the third reason is that most of the companies are going to give big dividends come May. It's usually the biggest dividend in the whole year. Or for some companies that only give one dividend a year, usually they give it in May. Alright, so most of the experienced player, they tend to buy in the beginning. Okay, they go, after the rally they sell off. They don't care about the dividend, because whatever rally, whatever capital gains they have gotten, right, is already much bigger than the dividends that the company are giving. Okay, so these are some of the reasons that I've thought of over the years to know why this prophecy seems to come true, especially for our Singapore market. Okay, so we just have to I mean, this is an extended rally, so if there is a May sell down, I mean, don't be too alarmed lah. No, this is to be expected. I have a lot of queries, customers asking me, hey, Sam Marine can buy or not? Okay, newspaper report about it and all these things. So I mean, I just let you show my chart based on the 20-day, 50-day, 200-day moving average. The price goes this way, right? I mean, it won't catch my attention lah, you know. So usually I didn't see it, and I won't monitor it. So until I hide this 200-day moving average, that it becomes clear that actually can buy. Way before the rally lah, like 16 cents or so. Okay, so but after this rally, okay, the Straits Times publish the news, okay, of Sam Marine contract win, right, is on this date, the 6th of April. Okay, and it's only after Sam Marine had done a 1, 2, 3, 4 days of huge rally, right. On the 5th day, then they report the news. Okay, so I hope you guys can understand, when sometimes you see big news that comes out in the Straits Times or in the Edge, it's usually too late. Okay, because they publish the news, they want the most of the retail investors who read the news to jump in and buy, you know, while they are selling, you know, and taking their profit, because they had already accumulated here over the past 1 year at this price level, you know. So they wanted all the retailers to come in to buy their shares when they sell it to for them to sell to. Okay, so this is the reason why I tend not to buy into news. Alright, so but can we still buy? The main thing is we have to look at how it rests. Okay, so most likely it's going to rest for the next 2 to 3 weeks. Okay, I reckon. So we see about that. Most likely like around 20 cents. If it forms a base there, the support region there, you can look to accumulate that in that region. Okay, so this is for Sam Marine. Okay, yesterday I posted some stocks. Okay, so let's talk about the miss. Okay, the first big miss is the ST Engineering. Alright, I mentioned that it looks like it's going to move up, but it did move up. You know, in the morning it gap up. Alright, and it's not a little bit. No, it's a huge gap up. Kind of like 4 cents gap up. You know, and it rallied. So usually such case, right, in the early morning gap up like this, I tend not to trade really, because the sellers tend to people will tend to come in, and especially in a region here, so-called resistant region. Okay, so you do take note, when such thing happen, right, it just gap up like this, and then it started to sell off, or couldn't maintain above the this resistant area, then this is not a good trade anymore. Okay, so ST Engineering, we still have to wait. Okay, Singtel is mainly in this big consolidation. Okay, my initial assessment was that it most likely is going to ding dong a few more times. All right, but due to some volume here starting to push up, and then it start to stay above here in the high side. like above 245, I reckon that it might not wait that long. Okay, it might start to move off soon. Okay, so you can watch out for this. The only one that moved today that in the list I mentioned yesterday is GKE. Alright, so yesterday was here, there's a down bar. All past 3 days has been a very low volume. Okay, so today it has a burst up. Okay, so it might have a second day. Alright, so we see how about it. MedTech, yesterday also mentioned about this because of this particular run. So I know last week I mentioned PPE manufacturing companies is weak on a downtrend, but among all the PPE, only this MedTech had this rally, and with increase in volume. So they might have a different story compared to Top Glove, Riverstone, and UG Healthcare. Alright, so that's why I had a U-turn about that yesterday. Okay, and today there's a continuous one more day rally. Alright, so maybe they have maybe 1 or 2 more days, before it starts to pull back, and from here form a base between the so-called 95 to $1 area. Okay, so if you form a base there, there is a higher chance that it might break out on the upside for further rally. Okay, ISDN, I've mentioned since here, somewhere in the beginning of March. Alright, so since then it has rallied a little bit, consolidate, and then it carry on its rally. Okay, bear in mind that this is this small little rally is in a much bigger consolidation. Okay, so very likely the main resistance will be somewhere here, 77 cents. Okay, so there's still some room for it to move. Okay, and it might continue to just slowly inch up over the next 1 to 2 weeks. Okay, Oceanus, I've been talking about Oceanus for a long time. Okay, as I mentioned today there's a lot of companies that shows very similar pattern. Okay, so just like to highlight a little. Alright, so the main thing, one of the few patterns that you always should take note of is looking for initial rally and a shallow pullback like this, coming back down, like from initial rally right up to 3 cents, coming back down like 2 cents, and then start to inch back up. So usually such stocks you have to watch out already, or position yourself in. Okay, so thereafter it started to rally over the past like 1 or 2 months. Okay, so now in this big drop, what happens is we have a similar thing. There's a big drop, but this drop I would say is more of a SGX kind of move because they query the company. Alright, and thereafter it rebounded. Okay, and it traded very quietly sideways. So it's quite a similar pattern. It's an initial rally and a sideways movement, very low volume quietly. Okay, so what we have 2 days ago is there's another test on this major resistance. Okay, so I reckon that it might rest for 1 or 2 more days before it might just burst off. Okay, so Oceanus, I think the story is not over yet. There will be still some more movement coming in. P5 Capital, also mentioned yesterday, so it's still trading very quietly, 3 days. Alright, I tend to look at like 3 days, 4 days, because thereafter is usually the end of contra period. So whoever that has bought in the rally, right, they want to contra, they want to get out, they have to get out. So it's like a cycle. Okay, so probably you can watch out over the next 1 to 2 days, especially for those penny stock traders. So this few stock I'm talking about is more for short-term trading. This is 9天 Chemical. Okay, so all have like a similar pattern. Okay, so there's an initial rally. Okay, and then it's been resting sideways, and then second attempt. Alright, and it is holding up high here. So if you can break above like 93, 94 cents, right, it might have one burst move. Okay, so do bear in mind that you usually have one big move usually one big trust bar, one big trust bar. Infocom, I mentioned last week that there is this initial rally and a big drop. So if it stays above half of this candle, right, this drop candle, okay, so it's staying above the top half of it, which means it's kind of strong. Okay, so people are still collecting, people are still accumulating this stock. All right, so you can do watch out over the next few days. Enviro Hub, similarly, there's an initial rally in the early March, and then rested for 2 weeks. Okay, so today there is a pickup in volume, so this one you can watch out over the next few days. Okay, so that's all I have for the penny stocks. So for the so-called midterm big cap stocks, what can we look at, for those people who are more comfortable with big cap stocks? Okay, so this is Genting. Okay, Genting had been had a 2 times rally already. All right, and it's been resting sideways. Okay, so this is a good sign. Okay, we just hopefully can rest for maybe 1 more week, and then you can look to position into Genting for the next move up. Okay, Fraser Property also had this kind of rounding pattern, and then now there's this trend line here. It's been testing here about 124, 125 area. Okay, so there is a huge volume here, 19 March, mainly because of its rights issue. The rights issue is at 118. Okay, and with the TCC, the Thai tycoon that owns Thai Beverage, Fraser Property and such, 50% of Fraser Property also owned by them. They had subscribed for all the rights under them, and whoever that don't take up, all the excess rights, they also take up. Okay, so they had this commitment to Fraser Property, which means to say most of their holdings is at this 118. All right, so most likely is they will push it up, okay, for them to sell and take their profit and pay off whatever loan or margin that they use to take up the rights. Okay, so this is a possible scenario. Okay, and likely target should be like 140. Okay, this is Valuetronics. Mentioned about this last week already, that it has bounced off this support region. Okay, and then thereafter the past 2 days it break above the trend line, so this is a good sign. Okay, and hopefully it can pull back a little, like 625, 62 lowers, I would say, and if you can do that, then most likely it might turn up over here, and then chase its counterpart, like AEM, UMS holding and such. Okay, so Valuetronics seems like the laggard among the tech manufacturing companies. Okay, Fraser Hospitality Trust, it has formed a very big cup and handle pattern. Okay, this sell down kind of like freaked a lot of people out. Okay, so some did ask me, I told them this is actually more like a fake, it is to scare investor out, and then before they pump it back up. So it actually did happen this way, and then now it's retesting back its resistance here. Okay, so I can only say that this is a loose pattern, very loose, because it took a long time, since last year June. Okay, so it's like almost a year. Okay, so I reckon that it might pull back to form another smaller handle, so this become a cup and a handle, become a tighter pattern, and that would be better for Fraser Hospitality. Okay, so do watch out for this. Most likely might consolidate for maybe 1 or 2 weeks, forming another handle below the resistance, and then it break off. Okay, Capital Retail China Trust. Okay, CRCT, mainly there is this initial rally back in December, January, and then it's been consolidating over the past 4 months. Okay, so it has rejected the support. Okay, so which means to say this support is holding 132 to 135. Alright, so currently it's trading 139. Okay, and it's been trading sideways for the past 2 weeks. Okay, so most likely it might be turning up. Okay, the 20-day, 50-day also starting to turn up. So in the short term period, it might go for the high here about 147, 148, and it might also break higher. Okay, pending also this I think there's some acquisition, completion of its acquisition, some 5 Chinese business park. and once that is done, they is most likely going to be adding it on into their revenue and dividend distribution. All right, most likely they are waiting for this news also. Okay, so we just have to watch out for this. Okay, so for those who still have, you can just hold on to it.